This is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily quick stock market analysis, where we look at the technical charts and try to understand what exactly happened during the day in the market and then plan for a better trade for the next day. That's April 25, Thursday, 2024. That's tomorrow. So we had a second range bound day. Once again, we have a close flattish, and we're at ultra low VIX at the 10 nearby levels, and we have a monthly expiry tomorrow and Thursday, right? So let's try to understand what exactly the possibilities, probabilities, that could help us take the trade and then be in the market, right? So we would be analyzing, we'll be grabbing it first, and then we'll look at what's in favor, and then we'll come to a conclusion. Okay. Before that, let's look at the technical charts. So this is the candlestick that is formed today. You can see that it's a small body. Small bodies are indecisive. It shows a selling pressure in the big size on the top. It's an inverted hammer. Inverted hammer does not have much significance here because it's not in the top of a trend. So you cannot make out anything, but it's an inside bar. The body of the candle is inside the previous candles, inside that. So that way it indicates some consolidation. And also this is the fourth day where we have a positive close as compared to the previous day, right? 4 days of positive closes, and looks like the reversal attempt after 5% retracement seems to be working, but the last 3 days of candles are small body and decisive, indicating there is some resistance out there, and especially very close by 22 to 500, 503 or something. We have a gap resistance that was from previous week when it was capping down. So that's where we are. Banknifty absolutely inside the previous bigger candle, indicating it is consolidating. And it's also a small body, almost like a spinning top. It does not have any relevance because it's mid of a trend, not in the top of a trend or bottom of a trend. And that's what Banknifty is consolidating. Banknifty also faced some resistance at the 48,500 levels because there is a gap that is formed, and that's how it is. And Banknifty also, that's a fourth day where it's closing above the previous day's close. But the last 3 candles are not that great, except the first one that happened on the 4th, that happened on 19th, when the big dip and reversal happened with the piercing pattern. So that's almost 3.6% of the Banknifty record. So it's more than 50% of the retracement of nearly 5%. So 50% of that is 50% or more of that has been retained in the last 4 days, and the reversal happened in 6 days nearly. So basically it's you can see a trend line channel here, and market has not reached the higher low pattern, the price action pattern that's intact still, because it reversed quickly just before that, right, 3-4 days back, and that could be the bottom of the parallel channel, and looks like now it's heading towards the top of the channel, which is all-time high levels and above. As far as heading, the only thing is the last 3 days candles are not very encouraging. They show resistance. Banknifty also, it's in a trend line channel. It had hit the top exactly on the trend line channel, took a support of the 100 exponential moving average, and then bounced up. And last 3 days are not great looking candles, but it managed to close above the previous day's candle. Positive closes for the 4th day consecutively, indicating that probably the bounce up is for real. But you can see that there is a gap resistance that's right there on Banknifty also. Now, looking at the support resistance levels, the first support could come in at the 22,316, which has got the 20 exponential moving average. After that, 21,180 has got the gap support that has happened on 3 days back, and if that's breached, then 22,132 very close by has got the 50 exponential moving average. So 22,100 and 22,300. So that 200 points, that range has got great support zones. As long as it's indicating it's consolidating, that could act as supports. And if at all a breach of that 50 exponential moving average, then you will have to keep it close with the 22 22,000, which is a major big rounding number as support, and then after that 21,700 is a previous swing low support. On the upside, the first resistance will be the gap, this is 22,500, and after that it's the all-time high 22,775, which is the major resistance. But for tomorrow, it could be a fight for the 22,500 if it is moving up, and it could be managing to hang on at above the 22,000 and 22,300, that level. So the case it's having some kind of reversals. Right, so that's where the level gap supports and resistance levels are indicating. And for the bank nifty, now we can see that the first resistance upside will be 48,500 nearby, where the gap is there. After that it's 49,000 big rounding number, and then 49,57 all-time high levels. So that's resistance in the upside. Downside, the first support coming at 48,000 big rounding number, 47,739 is 20 exponential moving average support, and then 47,265 is 50 exponential moving average support, and 47,000 is another big rounding number support, and then 46,700 is the 100 exponential moving average support. But for tomorrow, there's likelihood that the market may be trying to break that 48,500 and then try to move up. So that will be a major hurdle. And if at all there is a retracement happens, or supports at 48,000 and 47,750 could come in play, right? Most likely. So that's the support resistance level of the Nifty and Banknifty. Let's just go quickly to the wrap up and then come to a conclusion. So we had a fourth day of recovery, a fourth positive close, and today also the flattish close of 0.15, 34 points up, and it's a range bound day for 2 consecutive days. Absolutely flattish close, and it's an inverted hammer, an inside bar, a small body. Indecisiveness and consolidation part indicates, but managed close about 20 exponential moving average today also. And remember, we are 35% rally since almost 1 year now, and it's 45% of retracement has happened, and the market is claiming the 22,400 and closed about that on a Banknifty expiry today. Banknifty actually went range bound just like the Nifty, and the fourth day of recovery, fourth day of positive close, but once again it's less than 0.5%, so that way it's flattish but better than Nifty. It's 218 points up, and here also we have an inside bar very clearly, and then a small body indecisiveness is evident, but market is about 20 exponential moving average in the case of bank index as well, and it's close about the 48,000 and much beyond that. 189. Remember, it's a 27% rally, so almost a year, and so 8.5% of retracement has happened max. Intraday, it was a gap up just like yesterday, and then it was a slight dip, and then went range bound, and finally it closed almost positive, almost flat, and positive green just like yesterday. Levels of support and resistance we already seen. I'm not repeating that. So we are putting in buckets what's in favor of the what factors or parameters are in favor of the bulls and bears, and then we come to a conclusion, or we can go to your conclusion. So it's a full day of positive close, and it's more than 50% of the retracement has been retrieved in just 4 days, and the higher line pattern is maintained. The 20 exponential moving average is maintained. Knowledge bands are not having any expansion downsides, indicating that it's contraction with bullish bias, and indicating that there is possibility this sort of consolidation only, not a bearish move. So that goes in favor of bulls. Sectoral indices are clean today also, except for the IT and the auto. In the moment in the short term daily charts, if you see, they are either bullish or sideways. None of them are in the bear zones except for the IT, which is slipped in there. Heavyweight stocks are closed green except for the IT stocks, Infinity, TCS, and the ITZ and Reliance. Right. So almost all of the momentum of all of the heavyweight critic stocks or 7 stocks that contribute maximum indices are having sideways or bullish momentum, and only the Infinity and the TCS has slipped in bear zone. So that way, sectoral indices and the heavyweights are mostly more in favor of the bulls and the bears. But not since not many of them are in the bear zones, at least that way. Now, open interest put call ratio is bullish for the Nifty and the Banknifty both. It's very near to 1. It is not gone. It is not more than 1, but it's so it's on the edge of bullishness, you can say. And we have a long build-up that happens on the options, on the futures open interest. So options of open interest and futures open interest is bullish as of now. It's a monthly expiry, so volatility could be expected. So India VIX is flattish close today, but remember yesterday it fell 20% nearby, and today it closed flattish and it's at 10.28 itself. So absolute flat VIX at the ultra low levels, and heavy percentile is at 79. Heavy spread is 20% only, getting better for the option sellers that way. Major US indices closed green, and it could be an indication that the bottom was found there and it may be reversal from here. But remember the fact, we have to be cautious about the fact that 6 to 8% of retracement had happened in the previous week from the peak of the rally. So there is potential for more retracements, but still goes in favor of the bulls because of the fact that we have 2 days of green moves now, a few days away from the Fed meeting at the May 1st. Now, what flows in favor of the bears is that the momentum of the RSI has not still climbed above the RSI 60, still rising up sideways momentum of both indices. And the trend indicator ADX is also not crossed over the bull zones, it's still bullish, bearish in the DMI negative zones as for the ADX on both indices. Now, the inside bar candlestick that is formed today goes mostly in favor of the bears because of the fact that it's not indicating a bullish move at least. Right? Maybe consolidating in that range, right? So that way the candlestick pattern is not that great for the bulls. Now the dollar is showing some green, and it spiked recently to 106 levels. So dollar is spiking. Rupee also remains to be weak and it's showing some flattish green. It's 83.3 levels. Crude oil had cooled off a little bit, 8%, but it's showing some red today also, and it had been spiking up to the top of the trend line channel at 83, above 85, and now that's not great for an oil body country like ours, so keep a close watch on that. Gold had spiked up, had cooled off 6% after it hit the all-time high, but it had been breaking out to all-time high and still remains to be near to the all-time high. Is the reason why it's going in favor of the bears. And the Fyers has been less sellers today. Also, today's data has not come in. Yesterday also. So the entire April month there were net sellers on every single trading day except for 2. So that shows the bearishness in the FIS side. So institutional support has to come in for the market to steadily move in. Otherwise, it would be in a very slow mode. The only thing that holds in the market is the domestic institutional money or the mutual fund retail money that flows in continuously. So the verdict is that before coming to that, the market today also shown that it is range bound. It is facing some kind of resistance. In spite of the fact that it is a gap up, it could sustain that, facing resistance, and then going range bound the entire day. And it is at ultra low volatility levels just a day before the expiry. So it has sustained the bounce up for the last 4 days with positive closes, and it has recovered more than half of what is lost in the 6 days previous retracement last week, and it has managed to close above the 20 exponential moving average. That's all in favor of the bulls once again. At the moment when the trend is yet to climb into the bull zones for a steady breakout to happen. So Nifty also but showing some inside bars which indicates consolidation mostly and not a big breakout that can happen. So multi bands indicate absolute contraction and sideways, just like the inside bar candlestick is indicating. But higher low patterns are intact on both indices. Despite the sharp fall, is maintaining that indicates that there are bulls there. It's still in the middle of the rally and very minor 5% retracement has happened so far in a big rally of 35%. So investors has to make use of each of this dip as buying opportunities in long-term quality stocks as IP mode or options, random legged strategies which can be found in the playlist. The traders, what matters is the direction. We don't have it at sideways, so I will play the for OTM non-directional strategies or spreads, which limits the loss, right? And directional can be upside or the downside, but just have to happen above the RSI 60 or below the RSI 40. Until then, sideways, and you have to play the non-directional or the spreads in the directional way using the options. Now, manage your risk also can happen. So, all that. So tomorrow we have a monthly expense can be very volatile. The range is 500 points, 22,000 and 22,500, where the highest put and call writing is Z. And PCS options open interest is showing almost bullish, and futures oil has a long build-up, so that is also bullish, right? And for beginning outcome is on May 1. Things may drastically change after the outcome of that. If there is anything hawkish or dovish on that, earnings news flow is coming, and Middle East crisis also not fully died down, and exit poll outcomes are going to come from the next entire month outcomes. This all could make the market jittery, and then could make it very volatile. So better keep in mind all of these factors. So that's all I have. Play it safe, manage your risk, have portfolio level hedges, and portfolio level stop losses, and that's the way to play the game. So that's what I have. Happy trading, happy learning, happy investing. Bye bye.